Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 28th of October 2019. And recently we've published a number of videos on gold and silver. And mentioning in particular that the investment community are now also beginning to seriously consider gold as a safe haven asset to be included in a multi-asset portfolio, whereas previously gold had been discounted in favour of bonds. While we were quite interested to see an article in Financial Advisor this week, the magazine for investment professionals, advocating just this. The article was written by Nitesh Shah, who is the Director of Research at Wisdom Tree Investments Inc., which is a New York-based exchange-traded fund and exchange-traded product sponsor and asset manager. In the article, he highlights that gold is back in fashion, as other defensive assets are offering negative yields, and in times of stress, gold has a positive correlation with the US dollar, something we haven't, in all honesty, highlighted of late, and believe it is now worth mentioning with a little more vigour. So let's listen to the article. Bolster Your Portfolio with Gold by Nitesh Shah, Director of Research at Wisdom Tree. What a difference a year has made for gold. In October 2018, the metal was in the doldrums. Gold was trading below $1,200 or £912 an ounce on October the 10th, 2018. Futures market positioning in gold, an indication of market sentiment towards the metal, had fallen to its lowest level since 2001. The market had shunned the metal, known for its defensive qualities, while equity markets were roaring. Today, October the 10th, 2019, however, gold is trading above $1,500 an ounce. Futures market positioning in the metal has recently reached an all-time high. So what has changed? Market perception of risks, both geopolitical and financial, have been revised upward. The ongoing trade war, primarily between the US and China, appears to be driving fears of a global economic slowdown. Manufacturing, the sector most affected by a contraction in traded goods, is declining fast across the globe. Gold, playing true to its historically defensive traits, has rallied as a result. The policy response from global central banks to the economic slowdown has also aided gold's ascent. Gold typically has an inverse relationship with interest rates. As policy rates across the world fall, gold prices rise. In fact, a low-rate environment has driven more than $17 trillion of debt, mainly sovereign bonds, to become negatively yielding. Gold, once criticized for not yielding anything, appears far better than other anti-fragile assets that are negatively yielding. In times of economic stress, many investors reach for safe haven assets and currencies. Among the group of haven currencies are the US dollar, Swiss franc, and Japanese yen. Gold is seen as a pseudo-currency, also an historically safe haven asset. Usually, gold, when priced in US dollars, has an inverse relationship with the US dollar. But in times of stress, when they are both in demand, they often have a positive correlation. That describes the situation in the past few months. Non-US investors who have bought gold in dollars have received a double boost. Gold prices have risen and the dollar has appreciated. Our modelling work indicates that gold has risen by more than what can be explained by just currency and interest rate movement. The sentiment factor, that is, what we glean from the futures market positioning, is very important at this stage. It indicates the market is fearful of an adverse fallout. It's not surprising, given how little policy space central banks have today, with interest rates already having hit the zero bound in many places. Comments from the European Central Bank seem to advocate higher fiscal spending as the monetary authority appears to be running out of policy space. Some investors are likely fearing that an age of experimental policy making is ahead of us, once again seeking the comfort blanket of gold. End of article. To summarize and reinforce the two key points Nitesh is making. One, gold is now attractive compared with other formerly used safe haven assets. And two, you can have situations where both gold and the US dollar can rise at the same time. Now we're going to produce another video on the US dollar very shortly, but the one message we wish to convey in relating to it for now is that the US dollar too is also seen as a temporary safe haven asset. And this is why, at least for the short to medium term, we do not subscribe to the imminent dollar collapse theory. We've seen time and time again, whenever a country faces economic peril or their own currency collapsing or at best falling significantly, those involved in foreign exchange markets witness and carry out a considerable transfer out of those currencies into the US dollar. So whilst it may suit the pumpers and conspiracy theorists to argue its imminent collapse, the investment community takes a very different approach. So, as we see other countries adopt negative rates and significant tranches of QE, do not be surprised to see gold gradually replace bonds by institutional investors, and so its price rises, and also the dollar's value rise too, at least for now, as they migrate from other currencies and equities into the US dollar. It's no surprise that Warren Buffett is holding around $100 billion in cash, because if equity markets do fall, he wants to jump in at the bottom. But here is a tidbit for the pumpers and a glimmer of hope for us all. As we aren't averse to a little encouragement, after all, we aren't manic depressives here at Illuminati Silver, though some may think that we are. Just imagine gold prices rising with the dollar, and then when the dollar is no longer in fashion, the dollar begins to fall. Just imagine how much both gold and silver will rise even further then. Now that day will eventually arrive, but we suspect it's still a little way off. Meanwhile, at the time of writing, gold is up $2 at $1,506, and silver is up 4 cents at $18.07. Both are waiting that important FOMC announcement due on Wednesday. Meanwhile, please do share your thoughts, and if you haven't already done so, please subscribe to this channel, press the bell sign, and pop over to illuminatisilver.com and ensure you've signed up either as a free or paying member to our inner sanctum. Meanwhile, we list some of the important videos on gold and silver we've published over the past 2 weeks in the description box below. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.